Well, joining us now is Tim Evans from Longleaf Trading Group. He joins us live now from the CME in Chicago. Tim, great to have you with us. Thank you so much. Of course, we have seen that downward price action in oil. Just guide us through some of the movers and the drivers behind this.
Hey, nice to be with you today as well, Natalie. Yeah, I mean, the market really is looking for a narrative. I mean, we're starting off the week on the defensive. After seeing, the market close kind of limping into the weekend on Friday. We saw some negative price action in stocks overall. Generally just a risk-off environment given the developments of what we were seeing with North Korea and the United States. But I guess the talk and the concern of that seems to be dying down a bit. We've seen big recoveries in equities today, big recoveries in the dollar, big recovery in the dollar. Negative pressure on foreign currencies, but crude oil did not participate along with that risk-on move that we were seeing in a lot of other markets. So I think that's a lot of concern, or gives a lot of concern for market bulls here to start the week. I mean, really from a technical standpoint, that 4750 level, which is the 100-day moving average and your 50-day moving average, they're kind of converging there around the same levels. We've seen some intraday volatility around that price, I think, while kind of that pivot point, so to speak, is ultimately being worked out. But the bears seem to have won that round going into the close today. So obviously that'll leave them in a bit of control as we pick up tonight's market session.
I'm keen also to get your take on a story that we just mentioned a few moments ago, sort of the allyship, the relationship that we're seeing between Venezuela and also Russia's state-run oil firm Rosneft. What do you make of a tie-up to that nature?
Well, I mean, I think for Venezuela, obviously having a well-capitalized firm, backed by effectively the Russian government to support their efforts is obviously very helpful. It's a very opportunistic move by Putin, effectively, which he's known to be a very opportunistic person. So he appears to be seizing on the crisis there in Venezuela, and is potentially putting Russia at the helm of oil distribution out of South America. I think that also will potentially give them maybe a stronger military option. I know as Putin wants to, firm up and build upon, Russia's, military sphere of influence, so to speak, and that's possibly could be part of the deal that, we're not privy to. But in terms of just being a bigger international player, clearly they're positioning themselves for that. And I don't know if they have enough money to back the Venezuelan government out of this crisis, but we're gonna see here in the coming weeks.
Absolutely. We also look particularly here at home in Australia, of course, to China when it comes to our energy and when it comes to our resources and commodities outlook. Of course, we had data come through yesterday in terms of China's resources output, oil refining dropping the most in 3 years in the month of July. This, of course, in a bid to ease brimming inventories, while fuel demand remained, in fact, pretty tepid also. The tiger economy, of course, creating a large chunk of when it comes to resources demand and the commodities outlook also.
Yeah, I mean, the thing is with, the way China's government and just the way they allocate resources, individual numbers sometimes can be very misleading. Because they'll front load or back load certain things that, can make, small data sets, look to be big outliers. And I think that may be what we're dealing with here. I think we're going to need to see a trend in those numbers, which, I don't see evidence of that yet. But the number that posted, if we do see a trend, of dramatic drops in refinery rates as well as just general usage, yeah, I mean, that's going to be a huge cause of concern for oil bulls, because at the end of the day, 2/3 of the global growth is coming out of Asia and primarily out of China. So, without that oil demand, any dream of, the market finding intermediate or long-term balance, I mean, that's out the window permanently if that ends up being a long-term trend that's developed. But I think it's premature yet to say that.
Does the bull camp remain, I guess, do they continue to hold conviction?
Yes and no. I mean, I think They're stubborn. I'll put it that way. I mean, we're not seeing aggressive buying, but we're seeing hopeful buying. You know, when the market sells off, we do see evidence of buyers looking to, come in and potentially be buying on discount. But anytime the market, gets a lift, we're not seeing aggressive follow through buying. And that's, when we see that kind of activity, that's when I would say the bulls are really in control. I talked about this with you a couple weeks ago. If you look at option prices and you go out 6 months and you look at the implied volatility levels of both calls and puts, you're going to see the implied volatility levels in puts elevated relative to calls. So in a market environment like that, I think one would analyze that kind of information as the bulls are not very emboldened yet. I mean, typically you would see in crude or any other hard commodity, the volatility levels should be higher for calls as the market's going up, not the other way around. So, until we see evidence of that in the option space, I think it's hard to argue that, bulls have a whole lot of conviction at this point. I think bears have a little more right now.
With that in mind, I mean, you've spoken already in terms of the price points that we're looking at, and I guess from that psychological perspective, also what investors are looking to. I mean, from a technical perspective, we're really starting to look at that 100-day moving average as being the really key and crucial point now.
Yeah, and in the markets, we've been oscillating around that, and there's been a lot of volume around that. But to go back to what you just asked, is there any conviction? And as we kind of got away from that price level to the upside, it faded pretty quickly. And as we've moved our way down, we closed with weakness today. So we'll see if that ultimately follows through tomorrow or the next day. But I'd imagine that 47 level, a bit beneath that, should be relatively supported from a technical standpoint. So I think really, Natalie, until we have a strong narrative that the market overall can buy into, whether that be bullish or bearish, we're going to see some pretty tight range, choppy market action oscillating right around that 50 to 100-day moving average at 47.5.
Tim Evans, on that note, we will leave it there. Great to have you with us this morning. Thank you so much.
Hey, thanks, Natalie.